that the bank has unveiled, and of course the numbers were not too great this time either. Ravi, Shenoy, the Vice President of Midcap Research at Motilal Oswal Securities, joins us now to track this stock and many others. Ravi, hi, good morning. This stock, used to be the darling of FI investors in the year gone by, but in the last two quarters, it's completely fallen by the wayside, and now there is this massive expansion plan by the management. Would you worry about it not being able to grow in a very competitive environment full of new payment banks, etc., or would you keep the faith and buy into the dip?
No, we are slightly concerned about the kind of pace that the management wants to grow at. So our earlier estimates and guidance from the management also was that they would want to grow the branches at 25-30 per annum, and they want to achieve what we thought they would in the next 3 years, in the next 15 odd months. Now that costs money, so it means that you will be taking a hit at the cost level, and we have downgraded our numbers so that our growth in PBT, which was almost 34% for the next 2 years, is down to 16% right now. So that's something that we think will be in the mind of investors. You are unlikely to see great numbers from the company, so we are expecting about a 8% kind of earnings growth even for next year. And to fund the growth in branches, the management probably also would at some point of time come in and raise more funds. That's something that's more concerning to us. Plus, what this let's say expansion does is also it brings down ROE to a level where these kind of valuations are not sustainable. So we'd keep off DCB for some time now. We would rather focus on the other larger private banks in this space.
Hi Ravi, good morning. Dish TV turned around in Q4 of FY15, and then in the previous quarter it managed to hold on to its profitability. What are you expecting in terms of financials for Dish TV going ahead, and is that a stock that you would recommend considering it's already run up so much?
We are still bullish on Dish TV. Our target's about 130 rupees, and we think the good part about the growth is still up ahead. We've just seen the company break even last year, and we're expecting a hockey stick kind of a growth in terms of earnings for Dish TV. Digitization phase 3, phase 4 would be pretty exciting from this company's point of view. Speaking of the shorter term, we're looking at 11% kind of growth QOQ for Dish TV in terms of earnings this quarter. So exciting times ahead, and we still continue to be positive on this stock. It's among our one of our top picks in the mid-cap space.
Okay, I just want to come back to DCB for a brief moment. Ravi, you were telling us how you have scaled down your earnings estimates, but what about the cost to income ratio? I mean, it's already one of the highest in the banking space, and now with this massive expansion plan, the expectation is that it will increase further. So how much do you see the cost to income ratio increase to?
That we think will move up to about 65% or so. So that's something that's caused majority of our downgrade in terms of numbers there.
So even if somebody is in it for the longer term with a 3 to 4 year time horizon, you would still recommend that they move out of DCB Bank?
No, from a 3 to 4 year perspective, one could probably hold on there, but one would need to be patient. And typically retail investors do tend to lose out patience if a stock doesn't perform in the short term. We've seen a period of underperformance over the last yesterday and today. We will probably see the stock meeting resistance on every upswing, because you will have investors who will want to get out and get into stocks that are doing better on the earnings front. So anybody who's holding on would have probably a frustrating wait before the growth actually picks up. Our numbers for FY18, however, are very exciting. So we're looking at almost a 34% kind of growth in FY18. What probably we were expecting in FY17 and 18 now would get pushed out to 18 and 19. So from a 4 year perspective, yes, there is growth there, but you might have frustrating times in terms of weight and other stocks performing while you're sitting with a non-performing stock in a portfolio.
Ravi, the AC market, the air cooling market has a lot of competition, but you would still go ahead and recommend a buy on something like a Voltas?
We've seen a phenomenal run in terms of market share growth For Voltas, they're currently sitting at almost 24% kind of market share. Yes, I agree there that things have got heated up, but so has the environment. We have had extremely hot October, and we expect a pretty good third quarter for the company. Please note that second quarter will be slightly muted here because whatever Dussehra sales could have happened into the channel will now start only in October, because Dussehra Diwali this time around is delayed by a month or so. So we expect third quarter to be pretty good. Having said that, second quarter also should show a strong growth. Our expectation is that we'll have almost a 14% kind of growth in earnings for Voltas this particular quarter. So it will not be a bad quarter, but it won't be a great quarter there too. But from a longer term perspective, ACs is a segment that is still significantly underpenetrated. We have 5% penetration in ACs, so there is a long way to go in this space. So if somebody is in for the long term, we think Voltas is a good way to play the growth in AC penetration.
Okay, fair enough. The other stock that you've picked out is Eveready Industries. It's a great story, you know, with so much growth coming in now from the LED lightings business. But you see, one seems to have missed the bus in this, because the stock is already up 80-90% this year itself. You think it's not too late?
No, when we look at it from a slightly longer term perspective, there is still a lot of steam there. Plus, while from the excitement factor, LED is a good growth area. This for us is a market which from 1,000 crores today could move up to about 6,000 to 7,000 crores in the next 3 to 4 years. So there's scope for everyone to grow in this particular market. And even if Finolex were to take away, let's say 8 to 10% kind of market share, it's a 500 crore additional sales that will come in for a company which has 1,300 crores of sales. So it's a great story to be in and get in if you still don't have it in your portfolio. But what most people miss out is the unexciting things. Batteries is something that is the bread and butter of this company. It continues to have a 50-55% kind of market share in AA, AAA batteries. AAA batteries are still growing at a pretty strong pace, and this will continue to throw out cash. Now this cash is something that helps this company build up its LED and other businesses. So there is likely to be a rise in payout for investors just because of the core batteries business. The batteries business is again where they've taken a 5% kind of price hike in the recent past. That will be reflected in 3Q numbers for this company. So pricing power is there in batteries, and LED is an exciting growth story. So which is why we continue to be bullish on Eveready. We have a target of almost 400 rupees on the stock.
Ravi, you've given our viewers a lot of interesting ideas to ponder over: Voltas, Eveready, Dish TV, and finally, you've also got a recommendation on Finolex Cables, where you see an upside of nearly 30%.
Yes. One caveat here that while we're speaking of quarterly numbers, Finolex may not report very good numbers this quarter. This is a quarter where they account for the dividend that they receive from Finolex Industries. They hold 1/3 of the shares of Finolex Industries. That's about 4 crore shares. Finolex Industries this year downgraded its dividend from 7 rupees last year to 2 rupees. So instead of getting 28 crores of dividend, they would get only 8 crores of dividend. So expect a 20 crore kind of shortfall in terms of profits. And this is the largest profit quarter because of the dividend. But having said that, we are seeing traction in the business of Finolex Industries, and we expect next year FY16 as well as FY17 to be pretty good for Finolex Industries. We are getting into a slightly technical terminology here. So there is a IFRS implementation that will happen this year and next. Finolex Cables would have to consolidate its proportionate share of earnings from Finolex Industries. That's likely to boost profits by about 25% CAGR, and the stock is available super cheap. So which is why we like Finolex Cables. The core business of cables is something that is benefiting from higher realty prices. So since you can't buy a new house, you go ahead and renovate your house, and that's something that's driving replacement cables demand from the retail consumer. This is a very profitable segment for Finolex Cables, and we've seen cables as a business grow at 15-18% historically. Given this urban slowdown over the last 1 year, we've seen volume growth come off to about 8% odd. In absolute terms, you will see a degrowth in terms of sales here because commodity prices are falling. Please note that Finolex Cable converts copper and plastic into electrical wires. So whatever cost savings they have, because copper and plastic prices have fallen, they pass some of that on to consumers so that they can grow the market. The benefits of that would come over a period of time. So we would continue to be bullish on this particular stock, with a caveat that this quarter would not be too good. So if you want to wait out and get in, if the stock reacts negatively at that point of time, you might have a beautiful opportunity there.
Okay, we'll have to leave it at that, but it was a pleasure discussing a lot of these interesting mid-cap ideas with you, Ravi. Thanks so much for joining us. That's the word coming in from Motilal Oswal, and those are the recommendations on what you should be doing with your long-term investments. We leave the markets in a very good place, actually, still closer to the high point of trade. The Sensex is still up almost 200 points. That's a wrap on Bazaar. Traders only will take up all the action. Thanks for watching.